Been focused. Let's welcome on board and take the market discussion forward. We've got Amnish Aggarwal joining in on the show right now. Amnish, hi, good morning. Good to have you on the show. What's it looking like for the market? Does it seem like at least a near-term bottom could be in sight?
Yeah, hi Aisha. You see the markets, if you look at say past 5, 7 sessions, I think they are showing some kind of a stagnation or a strength to some extent. So I think as of now, it seems to be nicely placed in terms of getting consolidated over here. And if you look at say broader economy, how the things are moving, I think uh, you see I'm not a chartist. I can't tell you the day-to-day movement, but at least in the near term, I think the market seems to be finding some support around these levels.
Amnish, the big news, of course, this morning is not just the fact that Bharti has announced an agreement with SpaceX's Starlink, but it's also Geo platforms. So it seems like there are going to be two takers. How do you think the telecom construct is actually going to build in?
You see, if you look at past few months, so there have been news that Starlink is going to enter India, and there was uncertainty regarding what will be the spectrum charges, how will be the regulatory aspects, which will be around this. Now, if you look at say Starlink, they have been very successful in some parts of Africa, US also. But I first of all, it is not going to disrupt majorly the telecom industry in India. That is one. Secondly, if you look at the release which has been given by Bharti, I think it seems to be more like a distribution-led alliance as of now, because the technology and all, I think that remains with Starlink. So I think when you're looking at say distribution kind of alliances, now whether it is Bharti, whether it is Jio, so I think any newcomer will try to enter into that. So to that extent, I think it is positive uh, for both Bharti as well as Jio, because the uncertainty that once the Starlinks comes into India, the existing telecom players will face the heat or they will get disrupted. So that doesn't seems to be at the outset. And rest, I think it will all depend upon how the things go, in what form, shape Starlink gets approval in India, what could be the spectrum charges, and how these all partnerships go. So I think these will play out only in the very long term. But in the near term, I would say technically it's positive for all the existing telecom companies which are entering into, you can say, these alliances with Starlink.
I'm spending a lot of time on Starlink because I'm just trying to understand that hoga kya. Let's understand. How does the telecom sector work? I'll just urge our viewers to be with me. They have towers, and then you have what are called as dark cables. Data goes through dark cables and through the tower, which means they have to have on-ground presence. Starlink has space presence. The data gets transmitted or circulated largely by satellite largely, and they have limited ground presence. So there is going to be a big change in the infrastructure requirement. So if Starlink becomes big, and I don't think Starlink is going to be mass market or Starlink is really going to be something very large. It's a different technology. Now with this different technology, 5G to 6G, 6G to 7G, what happens to the capex and what happens to the requirement in terms of funneling everything there, that will change. And second, what will happen to tower companies like Indus Tower as the prominence of Starlink will increase, we need to figure it out. So one, respite for Bharti and Jio. Why? Because Starlink is not coming independent. Second, it will change the way how the overall technology would move. Third, it will be a slow start, but markets would start worrying about companies which are in the telecom infrastructure space. That's my space. Amish, do you agree with it? That more than Bharti and Jio, we need to now figure out how the telecom infrastructure in India would move. I mean, Indus Tower, Tejas, wire companies.
Yeah, so Nikunj, I agree with you on that front, but we also need to look at that, for example, when Starlink went to, say, Africa, and they went to the remote areas. So it was more, you can say, targeting at remote areas. In fact, there have been many defense applications which have been used by, which have been, you can say, using this technology. Now, what happens is that in those countries, for example, you look at the overall subscriber base, so it is more being used as a, you can say, home internet or office, so all the enterprise kind of a work. That is one. So definitely it is not going to be at the mass level. But at the same time, it also, you can say, removes to some extent setting up of a ground level infra in the remotest parts of the country. If you look at India, I think still there might be, you can say, some areas, but definitely it depends upon how the technology scales up in future, because the countries where it is quite prominent today, there they have been facing the spectrum or the bandwidth issues. So now in a large country like India, they are not as large as ours. So yes, something is going to change for sure, but how far this technology will be able to carry the weight of a large country, or depending on the requirements, so that is something which we need to see. And I think only time will tell where we go from here.
Back with the market right here, 80 now. It's been okay for us actually for the last 4 trading sessions at least. And you know that recovery has come in, or at least some stability, I should say, has come in since the last week or so. Right now, the implied open is indicating a flat start, but it's stable around the 22,560 odd level. The one big drag, and how can we not talk about that, of course, was IndusInd Bank yesterday. It crashed to a 52-week low. There were downgrades trickling in thick and fast. Of course, the big question is, what should investors be doing right now? Amnish, for those who got trapped and still didn't get out, now with the kind of, loss that you had just yesterday alone, what do you do for IndusInd?
It's a very tough situation. If you go purely by numbers, I think the overall hit on the net worth is 2.37%, but the cut in the stock price is more than 10 times that. Because banking is more like a business of a faith. And when you are having, you can say, repeated lapses in any bank, whether it is, you can say, on the derivative side, say 6-8 months back, there were problems on the MFI side, which were obviously for the industry as a whole. So it actually shakes the investor interest to some extent. And currently now, if you look at, say, IndusInd Bank, so IndusInd Bank valuations have got better. If you look at like last 5, 6 years, there was a time pre-COVID when it used to trade at par or even at a premium to where HDFC Bank used to trade. So the entire banking sector valuations have, you can say, corrected. But IndusInd, I think that there's a loss of, you can say, faith which has happened. That is one. Secondly, post they took over Bharat Financial, the uncertainty in the overall portfolio due to MFI that has been rising. So if you go purely by numbers, I think maybe a quarter or two, even the MFI, I think the pressures they will, you can say, go up. But the main thing is there anything more which is to come by, and we need to get, and there has been an incremental trigger that the current CEO, the MD, has been given the extension of only 1 year. So I think they need to, I think there is some course correction which this company needs to, I think, take. So first, I think the slide has to, you can say, stop, and then maybe it might go into a long consolidation like what happened in 2020-21 around COVID. I think that time also the stock came down to around these levels, but over a period of time it recovered. So it's not, I would say, a bad franchisee. So it's not like a run on a bank kind of a situation, but yes, near-term pressures are there, and it will take time for the bank to actually come back. So the systems, processes, okay, a lot of things need to change, and it's more like a wait and watch. And in the near term, I think the markets might be more inclined towards, you can say, the time-tested large caps like your ICICI, Kotak, and HDFC Bank.
Let's look at the entire banking space per se. And here, if one really looks at this entire MFI exposure, which in a sense has been the trouble point, do you think after the Reserve Bank of India changes in tightening and revisiting the liquidity norms, one could perhaps look at banks with high MFI exposure, which is, let's say, a Bandhan, IDFC Bank?
Yeah, Nikunj, if you look at this entire MFI stroke, unsecured, all these pockets, there has been some sort of a stress from the last 12 to 15 months. Now, whether it is RBI guidelines or, you can say, likely uptick in the economy to some extent, I think this space should, I think it should bottom out. So definitely many of these stocks, if you look at valuations, I think valuations have corrected. However, I think given what has happened with IndusInd Bank, which obviously is the largest in terms of, say, MFA exposure, in terms of absolute size. So I think the confidence has been shaken to some extent. So in the near term, I still prefer that people will go with the top 3-4 players. But yes, for a person who is, you can say, for someone who can afford to take a slight bit of risk, okay, where the valuations are now much lower than where they used to be, yes, some stocks in this space will see bounce back over the next 6 months.
Okay, stay with us, Amnish. Private life insurers, the annual premium equivalent grew merely about 1.6% on a year-on-year basis. Now, the February data is out, and it's released by Novama, which is currently, indicating exactly that. Varun is here with more details on what exactly is going on with the insurance industry.
Well, if you look at the data, the month of February has not been that good for general insurance and life insurance companies. Let me start with general insurance companies, where the gross direct premium income for the month of Feb is actually down by around 2.8%. For public, it's down by, the public insurance company is down by around 4.3%, and for private, it's down by around 5.2%. Also, for the standalone health insurance products, the overall growth has been around 7.8%, although there has been a base impact on the overall growth for this standalone health insurance products. If you look at the overall market share and the gross direct premium income for ICICI Lombard is down by around 0.7%, and the market share has increased by around 19 basis points. For Star Health, it is up by 0.9%, so here the performance has been good, and the market share has been increased by around 18 bips. For Bajaj Allianz General Life Insurance, it is down by around 5.9%, and the overall market share has declined by around 3 basis points to around 7.1%. Now, if you look at life insurance companies, the APE growth has been mere 1.6% on a YY basis. The overall growth has been slowed because the sales in the ULIP has been declined because of adverse equity markets, and that's one of the reasons why the APE growth has been lower. Also, if you look for FY25, the market share for private insurance companies have actually surged to around 70.8% now. If you look at company-wise, HDFC Life, the individual APE growth has come at flat at around 0.9% YY growth, and the overall APE growth has been 5.3%, the total, and the market share has improved by 71 basis points. ICICI Pru, there is a decline in APE growth for around 18.2%. Also, for Axis Max Life, if you look, the APE growth is up around 8.7%. For SBI Life, the APE growth has inched down by 0.9%. Also, if you look at LIC, this has been much impacted because the APE growth has decreased by 17.4% YY, and also the company has lost market share by more than 400 basis points. So, if you look at the overall insurance data, it has been softer in the month of February.
Okay. Amnish, I'm little lost to understand insurance में हो क्या रहा है? Government is not supporting the sector, growth is not there, competition is intensifying, stocks are underperforming. So I used to always think that insurance is this big picture. Indians are underinsured, insurance premium will go up. After COVID, the importance of life and health had come back. But I just look at the data, which is the growth, the profitability, and the dynamics. They're just not supporting. Why is that? I mean, what is that which is troubling this sector where the big picture is so strong?
India has always been very strong. You look at any segment, we can say we are consuming 1/4, 1/5 of the world average. So whether it is insurance, whether it is consumption, whether it is auto, so everywhere you see the big picture will look good. But when it comes to, you can say, the smaller nitty-gritties of that, then if we look at past few years, you see insurance costs have also been rising. And today, if we look practically, lot of insurance products, they are not like your typical pure insurance products. Lot of them have got the investment which is ingrained into that. And obviously, when the markets are not good, there is some erosion. So I think there is some impact of that. And if you look at, say, all the life insurance companies, say 5 years back, the kind of valuation they were trading at, I think, yes, today they have become much more reasonable. I think today they are all where they are very, very reasonably priced. But if you look at 4 years, 5 years back, I think they were trading at a valuation like banks used to trade at, say, 4.5 times in India. So yes, the growth is low. The growth will come back. Valuations today are much more nimble than what they used to be 3-4 years back. But it is not a sector where you will see, you can say 20%, 25% growth. And I think in this kind of environment, if you ask me, the stocks will look quite defensive. So the downside in all these stocks, even if you look at, say, last month or so, stock like, say, an HDFC Life or some of the others, so I think they have been holding on to during this market rout. So from that angle, it looks good. But is it a segment which will grow very fast or which will give you very high returns, I think that has not been the case. But yes, at the current levels, I think the stocks looks good. Practically, I think many of the stocks, they have corrected to very reasonable levels. But it is one sector, I think, which is also not understood that well by the investor over the years. So, but yes, if you are looking at defensive stocks in these volatile markets, I think many of the stocks in insurance, they look reasonably good.
Interesting you say that. Amnish, other than insurance, what's looking like, ripe post the correction that we've had in the market, and where is it that you would be comfortable now deploying money?
Yeah, Aisha, is it for me?
Yes, Amnish, for you.
Yeah, Aisha, actually, we don't have a coverage on the insurance sector, so I won't be able to give you any, you can say, names exactly where the upside is or where we are headed in many of these stocks.
No, other than insurance, Amnish, what's looking good in the market right now after the recent
Okay.
fall?
You see, the market, as I said, they seem to be, I think, quite stabilizing. And if you look at, say, two buckets in particular, you see, external sector, I think I'm not very convinced about, because due to what is happening globally, what US is doing, I think there is little bit of, or rather, I would say there might be prolonged uncertainty for the coming few months till the time the situation stabilizes, some trade agreements are in place. So if you look at on the domestic side, there are two big buckets. One is your capex and one is consumption. So capex last 4-5 months, I think the things have started stabilizing. Orders are coming in. Will they grow profit by 40%, 50% like many of the companies have done in the past? I think that is not going to happen. Will they grow at say 10%, 15%? That looks likely. The valuations are now more nimble, and selectively, I think capex is one basket which looks interesting to us. The second is consumption, which has been under pressure, but with the combined effect of, I would say, you're lowering food inflation, cutting tax rates, okay, and even cutting interest rate is happening. So I think this basket should bottom out, and I think the performance from them should start coming in terms of, say, absolute growth, maybe by the end of 1Q. So I think that is one basket where there are, you can say, many stocks which can give you, say, 15-20% kind of returns. Okay. So I think these are the two baskets where I don't see any problem on the domestic front. And as we go along towards the course of the year, in both the baskets, I expect a reasonable return from all the frontline stocks.
All right, so let's watch out for some of the capex related counters. But Amnish, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us this morning.
If you like this video, then like, share and subscribe to ET Now.